I'm going to go ahead. You guys can keep introducing yourselves in the chat. It's great to have you guys here with us. I'll go ahead and just do a little bit of an introduction. So hi, everyone. Welcome to this webinar. What would Jesus do? What can the investing world learn from faith-based investing? This webinar is the 7th in our Think Big, Think Impact webinar series. I'm Erin Duddy, the online and next gen program lead at the Center for Sustainable Finance and Private Wealth at the University of Zurich. And it's great to have you joining us for the webinar today. So I'll be your moderator, and before we kick off the webinar, I'll just highlight a few features of this room. We'll have time for Q&A towards the end, but please submit your questions throughout the webinar in the Q&A function, which you'll find at the bottom of your screen. And we'll try to answer as many questions as possible in the webinar, but if we don't get to your question, then we'll do our best to answer it in the follow-up Medium post. And if we don't answer it there, then we'll answer you directly in your email, so you'll get an answer. And if you look at the chat box, the standard setting is to all panelists. And if you want to be able to share with the fellow attendees, you can just click the drop-down menu, which you can then set it to all panelists and attendees. And then now that the technical bit is behind us, we have an exciting program for you today. First, we'll dive deeper into faith-based investing with Taeun and follow that up with a panel discussion. And I'd love first to introduce our panel. So if this is your first webinar with us, then I'll introduce you to Taeun Kwon. She's the blended finance research lead conducting industry and academic research on how to effectively finance impact. She's also responsible for running training programs in blended finance and impact investing for donors. We also have Kayoko Lyons, and she's the director of impact investing for the Missionary Sisters of the Sacred Heart of Jesus. Prior to this role, she worked at Microvest Capital Management, an impact investing fund, and for JP Morgan Chase. She holds a BA in economics from the University of California, Berkeley, and an MA in international economics and development from the Johns Hopkins University, Paul H. Nietzsche School of Advanced International Studies. And lastly, we have Sean Gilbert joining us, and he's the Director of Member Engagement at GIIN, or the Global Impact Investing Network. And he oversees the GIIN membership of over 280 member organizations from across over 40 countries around the world. Sean has worked for over 20 years in both the private sector and nonprofits on integrating sustainability into business and finance. Prior to this role, Sean was the head of partnerships and outreach with the NDC partnership at the World Resources Institute, where he led governance and outreach to launch the global initiative to support countries in achieving ambitious climate and development commitments. And on that note, I'll hand it over to Taeun Kwon to introduce you to the wonderful world of faith-based investing. Taeun, over to you.
Thank you. All right, let me try to share my screen. All right. Does it work? Okay, good. Erin's nodding, so it means it's working. All right, guys, welcome to our webinar. And I just before I start, I want to give you 2 disclaimers. One is that I am not a person of faith. I am an atheist. And I just want to say that I was really interested in the topic area, but because I don't come from the faith-based investing world, there might be some mistakes, or there might be some things that I say that might be insensitive, and it's not really my intention to offend anyone. But if I do make mistakes, please just shout it out. I'd love to get your feedback on that, and don't be angry. And then another thing I wanted to call out is that so far up to this point, my research has been focusing primarily on the Christian faith, so Catholic and Protestant faith. And I'd love to include more. It's just out of an access reason that I decided to focus on those 2 up to this point. So yeah, so let's get into it. Well, so like Erin said, I'm Taeun, and my background, I thought maybe I'll introduce myself a little bit more. I've always been really passionate about social entrepreneurship and social justice, And this naturally led me onto the path of sustainable finance. But what really got me interested in the topic, actually, as a secular atheist, is that I thought, okay, in sustainable finance, there are a lot of people who try to marry this conviction of or this concept of their values together with finance. And these are two very greedy logics. And when it comes to value, what is actually quite strong or stronger than any value is religious values, because it has a very normative stance. And I thought, okay, how do religious or faith-based organizations actually deal with these two different logics? So that's how I started the journey. And, you know, being me, I started Googling faith-based investing just to see what a faith-based investor was. And these are sort of the images that immediately popped out. And this was actually also part of my prejudice that, okay, this is sort of what a faith-based investor probably looks like. Apologies for my very prejudiced perspective, because when I actually attended a conference that was hosted by Faith Invest, and I also saw that somebody from Faith Invest was coming and joining. It was a really interesting conference because at the same table, I had so many diverse groups of faith-based investors. Some had more stronger view on ethics. So it wasn't necessarily religious values that they were promoting, but it came really from more of an ethical and secular perspective. You had some people who were completely focused on the financial side of things, and they just had a fundamental organization that was faith-based, but as such, they themselves were very, very financially driven. Then you also had people who were very much on the activist agenda, who knew not much about finance and were really social justice warriors. So I realized that actually faith-based investing, it's a very, very broad landscape. And that, oh, did you actually knew that, for instance, that investors, the largest majority of investors who file shareholder proposals, for instance, are faith-based investors? See, this is something I did not know about, and I thought was really interesting. So this made me embark on investigating, who are faith-based investors actually? And so I started interviewing people, and so far I did roughly 20 interviews from large and small Christian organizations. And this is sort of what came out of it. So you have the asset owners, you have the intermediaries, and you have the final investments. And there, as the asset owners, you have, for instance, pension funds, you have faith-based organizations like the church or the temple. And then you also have foundations or development organizations. And it's mostly the asset owners that I was focusing on. And the differences between those organizations were quite large, and their similarities to their secular counterpart was actually more. So they had more of an overlap. A Christian pension fund, for instance, would have a larger similarity with a secular pension fund than it would have with another church endowment or another foundation, Christian foundation or Catholic development organization, for instance. So that somehow also motivated us to do this webinar, because we felt like, okay, the faith-based investing world doesn't necessarily speak too much to the secular investment world and vice versa, or the mainstream investment world, vice versa. But actually there is a lot of overlap, and value-based investors and faith-based investors could actually come and share their learnings and drive the industry forward. So let me quickly share the three main findings that I have found so far. The first one is that in a lot of faith-based organizations, they have something called the ethics committee or the social responsibility committee, or it comes in many names. And what they do is they serve as a safe space and guardrail to the organization. So when you look at an investment process of a typical faith-based investor, or should I say an institutionalized faith-based investor, a lot of them have certain guidelines and limitations. And then based on that, the operation team puts together an investment proposal, and then they submit it to a board that makes the final decision and gives the final approval. And then the manager executes the wishes of the organization. And what an ethics committee does is, first and foremost, it heavily influences the guidelines and structures the guidelines. And then it also has in a lot of organizations, it also steers somewhat the investment proposal in terms of either through exclusion or through selecting certain themes that they want to focus on. And then sometimes the ethics committee also sits together with the investment committee and has members on the board level. So this is also how they then steer the final investment decision and do have a say. And this is a governance structure that is not necessarily observed in a lot of value-based investors. And how the ethics committee serves is first as a guardrail. So they really make sure that the investment process doesn't go off-road, and at the same time also shape it in a larger way to just guide the way a little bit without restricting, of course, the process. And I pulled out some quotes that I thought were particularly interesting. So one pension fund mentioned that because we are a faith-based investor, we've had an ethics team in place to make sure our trustees get impact investment. I think there wasn't a huge challenge into buying into the concept here as there would be in some other organizations. And so this existence of the ethics committee somehow had an influence how receptive the organization was towards impact investing. And it also serves as a safe space, which I thought was very, very unique to faith-based investors. So the ethics meeting in a pension fund that has this structure, the ethics meeting is very different to the rest of the meetings. It feels like everybody sits back like this, gets very philosophical about things. Every other meeting is like this, and the purpose it's like, this is the purpose and we're running out of time. That meeting is very different. That's obviously a place where faith is expressed because you're wrestling with issues of faith and how it applies. Or another quote, you need space to have the debate to allow different people to weigh in because it's never going to be clear. I think having that meeting gives people the space to air those disagreements and views in a way that if we didn't have the space to do it, you'd get someone who became authoritarian in making all the decisions and frustrate everyone else. And I mean, as long as I've been in researching sustainable finance, I haven't really seen a lot of value-based investors who deliberately sit down on a regular basis and really discuss heated topics to this extent. So an example from a sisterhood was that there's a classic investment committee and there's an ethics committee. And the ethics committee is really responsible for things like determining what the screens should be, determining what our proxy holding policy should be, determining what companies to engage on issues. And right now we're having the conversation about all extractives, anything that comes out of the ground. What should be our approach? Are we better off having a seat at the table and engaging the companies, or are we better off walking away? Another relatively, I think, controversial issue for faith-based investors in Christianity is also contraceptives. So there was a discussion on it. What I found difficult was talking about different types of contraceptives, especially being a married woman on childbearing age and thinking about it's all well and good to sit here and moralize. You're all 20-something-year-old men. This is not something you have to deal with. So we sat and looked at all the different kinds of information leaflets of pills and what they say and what they don't say. And it's quite amusing to watch these young men suddenly become experts on the contraceptive pill. For me personally, I found that a real struggle, but at the same time, I had no issue having the discussion with the people in the room. And you see that the existence of the committee or the ethics meeting somehow gives space to air these discrepancies, these differences in values, and reflect on those, which then actually makes the organization quite progressive and proceed in their thinking and development. So I thought that was a really, really interesting finding. A second finding is, this is a quote from somebody: in the end, it all belongs to God. And that was sort of their mentality to make things work in terms of making more impact-driven investments. So every single time we talk about impact investing, the big question is there a trade-off? And, you know, Sean will later on tell you all about that. There is no trade-off, or it's possible not to have this trade-off. And this is a big misconception, or from my perspective, it's often used as an excuse not to actually pursue impact investing. And people saying, okay, you know, we have fiduciary duty. But there are organizations who are doing it and who are not, who are also applicable to, and hold responsible for their fiduciary duty and still doing it. And in all these progressive faith-based organizations where I asked them, they said they don't have this trade-off. They don't experience this trade-off. So one organization said, this question gets asked a lot, and I think that there is a spectrum. I think that in some cases you don't have to give up financial return, and in some cases you do have to give up financial return, but that's the same as any investments. Some investments that you look at, regardless of impact or not, they're going to have a larger return than others. And so they don't really see it as a conflict, or that it's necessarily a new thing. And how they make it work is that with some, okay, so here is one asset manager said, well, actually it is a balancing act there: risk, financial return, and social impact. And they deem it as a necessary component already, and not really conflicting. Another pension fund was stating, well, we want to make smart commercial decisions on behalf of our members. So for them, it was a tool to make a business case. But how they tried to actually wrap their head around having impact and having financial return was actually, every time they would experience this conflict, they would take a higher perspective on what I call the God's eye view in my working paper, and think of a larger scale. So I think it's very easy to, I look through hundreds of controversies that have happened, and you can very easily get used to it and desensitized. I think just stopping and looking back and thinking what my faith tells me helps me with that. So they actually take a God's perspective and say, well, you know what, at the end of the day, God owns the world, and he has put us humans as stewards of the world. So I need to invest accordingly. Financial return, social impact, at the end of the day, it's all what God would want. And so that's how they create a mental mechanism to deal with these everyday frictions or tensions that they might experience. And the third finding that I thought was immensely interesting is the power of the sister act. So when I looked into very impact-driven investors, a lot of them seem to be sisterhoods. And so one quote, and I'll stop after this quote, is that the sisters really, they understand the mission, and they really truly understand the populations they're trying to serve, because they've been working with them, living in these communities for over 100 years. And this is these seem to be particularly true for sisters, and they are currently also in a financial situation with more liquidity and a dwindling, sisterhood. So they don't necessarily have as much cost that allows them to actually go all in for impact. So if there are impact investors out there that want to invest impact first and also look into concessionary investments, then approaching sisterhoods and talking to them might be a really great idea. And we have Kayoko to tell us all about it. So let's actually hear it from Sean and Kayoko, and I'll stop briefly here. And while Sean and Kayoko can tell us a little bit more about themselves, maybe Aaron can put up a poll. Oh, Kayoko just appeared. On a poll just to see who is in the room. And I'll stop sharing my slides. Yeah, so how about Sean, you tell us a little bit more about yourself and your experience with faith-based investing.
Yeah. Thanks, Taeun, and I appreciate the invitation to participate today, and also the really interesting overview that you just gave. That's the first time I've seen you kind of explain it that way, and it's quite a powerful story. So I come from the Global Impact Investing Network. We're an organization based in New York, but we have a global membership and work as a global network. As Taeun mentioned, I'm the director responsible for the membership engagement. I'm also overseeing another program which is focused on asset owner outreach, which is where the faith-based investor engagement begins. We're an organization which is dedicated to advancing impact investing as an investing idea and as an approach. We're not exclusively focused on faith-based investors, but over the years, we've had a number of faith-based investors within our community, and over the last year, we've spent a more dedicated effort in terms of starting to better understand how to work with that community, because they are sort of values-based investing is sort of a natural partner to impact investing. And so we spent some time trying to get a better understanding of where the thinking is and how secular investors could be helpful in terms of supporting faith-based investors and sort of thinking through how to pursue impact in a more focused way.
Yeah, thanks. And there's also a great report that you guys put out this January, right? So I guess Aaron can put on the link for anybody who's interested. And then now that Kayoko's back, maybe we hear a little from you and your experience so far.
Sure, sorry about that. My internet cut out. Yes, so I am Kayoko Lyons. I'm the Director of Impact Investing for the Missionary Sisters of the Sacred Heart of Jesus. We are a Catholic missionary sister organization that was founded in 1880s. And it was founded by Mother Cabrini, who was an Italian woman who in her day went from Italy to the United States, first to New York, and eventually she spread throughout the US and into Latin America. But originally she began working with Italian immigrants. She started schools, hospitals, orphanages. Broadly, she was eventually serving vulnerable people around the world. And today our organization still runs and operates a lot of those works that Mother Cabrini started. So we have a presence in 17 different countries. We're basically in every continent except for Asia. And a couple years ago, the sisters started thinking about how they could best continue to serve that mission to reach the most vulnerable populations around the world, as their numbers were decreasing as they're getting older, and a lot of younger women are not becoming sisters these days. And so at the same time, they started learning about impact investing, and they really liked this idea that they could use both their financial assets as well as their human resources to carry out mission. And so a couple years ago, they hired a CFO, who I think he's on this call, to help them align their temporal goods, so all of their resources, their assets, real estate, investment portfolio with their mission to serve the most vulnerable populations. And then I was brought in about a year and a half ago to help them specifically build out the private impact investment portfolio. Before I even joined the organization, the sisters had committed and included in their IPS, their investment policy statement, that they were going to allocate up to 25% of their investment portfolio to private impact investments. So that's the portion of the portfolio that I personally am focused on, but I can get into a little bit more of the details later during the panel.
Yeah, thank you. So I just want to shout out to the audience to ask questions to Sean, Kayoko, or myself, and just feel free, because we want to try to be as interactive as possible. While you come up with questions, let me ask a couple just to loosen it up a bit. And Kayoko, let me just start with you right away. Since you mentioned that you're overseeing 25% dedicated to impact, could you give us a couple of examples that you find particularly interesting?
Sure. So first I'll talk about a couple that we view as concessionary, and then a few that are market rate, because as you spoke to earlier, it's a spectrum for us. So on the concessionary side, one of the investments that we're in the process of working on is called Newbies. They're a social enterprise based in the Netherlands, and they work to integrate newcomers or refugees into Dutch culture. And we helped them bridge some of their cash flow timing needs from when they're getting government funding and grants to when they actually need the funds to invest to grow their organization. They're doing a really great job of doing some important work in terms of cultural integration in host countries. I should have mentioned before, we do have a particular focus on refugees, migrants, displaced persons, immigrants. Mother Cabrini is the patron saint of immigrants. So it's a group that through our missions, through our real estate, through our investments, we're really trying to find ways to support them. What's interesting about Newbies is that we are their first lender. We're doing a relatively small investment, and it's a size investment that oftentimes a lot of investors wouldn't consider because it's too small. It takes just as much time to underwrite a small investment as it does a large one. And we have really decided and recognized that our capital is very unique. We're very flexible in what we can do. And so we've made a commitment to spend the time and energy to do some of these smaller investments that might get overlooked by larger investors, and try to crowd in other investors. So if there are other investors on the call here that are interested in such a transaction, we're sending our memos, our diligence, all our notes. We just want to bring more capital into the sector. So that's an example on the concessionary side. On the more market rate side, we're invested in a handful of different microfinance investment vehicles, MIVs, one of which is operated by Symbiotics called Regnifa, and invests specifically in sub-Saharan Africa in financial institutions that are serving individuals and small businesses. And many of these institutions are left out of the more traditional microfinance or financial inclusion vehicles, but we think that this is a pretty market rate of return investment because the structure of the fund is such that there's a lot of DFI or development financial institution money as a first loss tranche. So we provided notes into the fund debt. So from a risk-adjusted return perspective, we think that that's a truly market-adjusted return. And so I always encourage people who are skeptical that they can find those risk-adjusted returns, take a look at some of those MIVs, Symbiotics, Responsibility, Triodos, Blue Orchard, Microvest. They have a lot of very diversified funds that are much lower risk and have a lot of risk mitigating structures that help get you to that risk-adjusted market rate of return.
Thank you. I mean, Sean, you probably were in exchange with some other faith-based investors. How do you see the struggle between finding impact investment opportunities, also with the relation to fiduciary duty?
Yeah, I think Kayoko actually touched on some of your comments as well. I think faith-based investors come with a very wide range of kind of experience and exposure to actual financial management and like investment issues. You have some that have got a CFO in-house. You have some that are completely dependent on outside advisors. So there's got a pretty wide range in terms of their sort of sense of what's possible in their own direct experience in making investments. I'd say for the most part, they tend to start from relatively conservative assumptions. And these are generalizations, but sometimes it's helpful to make generalizations. I'd say for the most part, they tend to start from a more conservative assumption and associate the term of impact investing and the idea of impact with complicated, illiquid investments in private markets, which are often for a lot of faith-based investors only a tiny, tiny part of their portfolio. So what the sisters have done, so Kayoko was just describing it, allocating such a large percentage to private markets is quite unusual. And so I think many start off with the assumption that even if they're interested in impact and expressing their values in a positive way, there's a high risk or greater chance that they'll compromise the actual investment, which then takes them into thinking that they're compromising on their ability to actually deliver on the services that capital is intended to support. So if it's a social service organization or such. And I think that it's true, as Kayoko said, it's true there are some investments out there that are concessional in nature. there are also plenty of opportunities where you can pursue things that are a market rate of return. And I think that's one of the most important kind of messages we took away from the work that we did over the last year in terms of some of the outreach that's needed, in terms of helping to illustrate where some of those opportunities are and make people more comfortable with the idea of impact.
So actually now we have questions coming in. One is that since this is related, and I also wanted to ask this question, Jed Emerson posted, much of the conversation today is focusing on issues that are common to all investors. What are some of the issues particular to faith-based investors, and how does faith influence investor decision-making in a different way from traditional investors? And I think, so in my case, what I did observe is that this, the existence of the ethics committee, like mentioned, was quite unique. And then this regular activity of taking God's perspective, whether it's through the exercise of praying every Monday meeting, or whether it's going to retreats regularly to discuss and meditate on what God would do, you know, that really helps them, always bringing back the raison d'etre of the organization back into finance and investing. But maybe Sean and Kayoko, you guys have additional points.
Sure. I would say two things. One, I think I came from a secular impact investing background. And so I had historically, before I had this role, always thought that there was something completely different and unique and unknown about faith-based investors. But when I joined the organization, I realized we all have the same goals: faith-based investors, secular investors.
Oh no, Kayoko, come back.
She said she has kind of spotty internet, so maybe,
Yeah.
maybe
Well,
Sean share
I guess while waiting, maybe Sean, you could jump in and say on you know, how, for instance, religious values exercise themselves through exclusion, but could also have a different way of expressing itself.
Yeah, and I think I missed unfortunately, one of the risks of working at home is that you're kind of exposed to noise, and there's a big truck that drove by my window right as you were reading out the question. But I think the original part of the question was, what are some of the differences or things that are unique to faith-based investors? And I mean, maybe to answer both of those questions in a way, I guess we went into some of the engagement that we had expecting to find that there were big differences between faith-based investors and secular investors. And we found actually that there really weren't. You know, the kinds of financial questions that people ask in the faith-based community are the exact same kinds of questions that people ask in the secular community. In many ways, it seemed that the process that faith-based institutions were going through was very similar to what foundations are starting to go through, of institutions where they have a very strong mission alignment, they have a strong sense of purpose, they're used to pursuing that through delivering services, and their capital is often kind of managed in a way that's separate from that. Universities, you could argue, would be similar as well. And part of the transition that's been happening in the foundation world has been starting to ask the question of, in addition to the programmatic things that we do, are there ways that we can put our capital to use for similar purposes? And I think that's a bit of what we have also been seeing some of the faith-based investors working through. I think probably where they might be a little bit different from the average secular investor that is starting to try to enter into a world of sustainable investing or impact, is many of the faith-based communities already start from having a fairly strong sense of having a values orientation, and many of them will have been integrating their values in one way or another into their investing for a long time. I think probably the transition that impact orientation and I guess the sustainable development goals writ more largely invite is a sort of changing the articulation of those values from being about things to avoid and things not to be invested into or not to associate with, which is the traditional base of values-based investing using negative screens, and reorienting it more in terms of a positive expression of what an institution wants to pursue, because almost any issue of concern to faith-based investors is a complicated challenge, and one of the problems is not having enough capital to fuel solutions. And there's lots of opportunity to be able to start thinking through how to go about doing that. But there is a pretty substantial kind of transition in mindset of thinking about using capital for a purpose and then also articulating that in a positive orientation in terms of what you're trying to create with the capital.
Hi, this is Kayoko. I'm back on now. Sorry. They're digging up the internet lines outside my house, so it keeps cutting in and out. So I really apologize for those technical difficulties, but it sounds like what I caught from Sean is he answered the question in the same way I was going to, but I'll just add, essentially I was saying my observation was that really there's more in common with faith-based investors and broader impact investors. And what I found to be the biggest difference is just in terminology. For example, just in the finance world, you use terms like risk-adjusted return and low risk, high risk. And one of our sisters actually told me, she says, stop using the word risk. It sounds so terrible. Just say high or low probability of losing your money. And so it sounds silly, but just recalibrating what we mean when we use these terms that we throw around in the finance world, I think it's not a challenge, but it's really been the only major adjustment I've had to make to work from moving from a secular to a faith-based impact investor. And the same way too, I'm learning about the religious terminology that they use. For example, charism, that's really a term that's used to reflect the specific and unique mission of an organization. Again, that's no different than what a secular group does. They have a mission, a vision, what they're trying to achieve, but it's just called something different. Or like I used the word temporal goods before, that just means assets. And so I think for me, just calibrating that terminology has been the biggest difference, just to make sure everybody's working from the same page.
Yeah, actually on the terminology side, I also had interesting experiences how there were mixed feelings towards the SDGs and how, you know, in the impact investing world or sustainable finance world, everybody uses SDGs to sort of map out and try to find agreements and have a conversation. Whereas with faith-based investors, some of them felt like SDGs are too short-term of a goal, and that they had been focused on stewardship and hence protecting the environment for a much longer period of time. And now all of a sudden the SDGs, which had a 15-year horizon, gets thrown in, which, you know, threw them a bit off the game. And I am aware that there are some organizations who try to map it out, SDGs and some Christian values, for instance, to make it easier for secular asset managers to respond to their needs. But yeah, I thought that was also an interesting language jungle.
I'd say on that though, the SDGs have become a pretty common language for investors to use or intermediaries to use to talk with asset owners about their interests. I haven't found a lot of investors that are really enthusiastic about the SDGs per se as a terminology. It's one but it is one that has kind of people started adopting because they find it convenient and they see many other people using it. So I'm not sure, again, kind of on this theme of the gap between faith-based investors and secular investors might not be as big as it seems. That'd be, on the surface, that'd be another example where they might find some allies if they or any faith-based investors that started voicing frustrations with the SDGs as a vocabulary might find some allies in the secular world as well.
I think there's another question for you, Kayoko. In terms of Missionary Sisters impact investing portfolio, does it include active investment in capital markets?
Yeah, so while we committed up to 25% in private markets, we're not at that level yet because we just started. So the majority of our portfolio is invested in public markets. We have been historically negative screened, as it sounds like Sean was talking about when I got disconnected. But we've been also working with investment advisors and consultants to move away from negative screens and into all positive ESG funds. So the bulk of our portfolio is in those types of funds.
So, okay, well, I do have some other questions. So, I mean, Kayoko mentioned a lot of their very impact-driven strategies, but I also realized that not everyone has the same flexibility. And maybe, Sean, you can also, if you have stories or cases of other, perhaps more restricted institutional faith-based investors that have embarked on this impact journey, maybe you can share how they did it or what was their approach in the beginning, how it evolved.
Yeah, I think that the starting point varies. The specific entry points varies for a lot of people, but the one common thread is it begins with some kind of an interest or an intention an interest in terms of being able to pursue a particular type of an outcome. And I think for many organizations, the starting point is they have some part of their DNA, their identity. So, for example, with Kayoko's organization, it's that DNA starts with the work that you've done with refugees and the historical sort of social service orientation or focus of the organization. Quite often, it starts where somebody asks the question of, well, couldn't we put some of our capital to use towards that kind of a purpose as well? And most organizations seem to want to start off with sort of often it'll be called a carve out or sort of dipping a toe in the water and trying to take out a little bit of funds. I think that there's typically people often will start with the private markets as well, because when you think about kind of intentional positive outcomes, it's a little bit easier to associate that with kind of injecting new capital into an organization or bringing some new capital to it. Although I don't think it necessarily has to start with private markets. And it often then takes a while as the organizations or as the investors start to kind of think through what's sort of different in terms of what they're trying to do. And usually the hardest parts are kind of getting better at expressing what they really want to achieve through that particular investment, and then getting comfortable with what, particularly if it's going into private markets, with what might be some new types of investment vehicles or some new types of investments. And I think one of the things that often comes with impact investing, because it's not quite as straightforward as saying I'm investing into a large cap value fund or something like that, there's often a little bit more that's kind of specific to the investment vehicle or to the sector that you're investing into. And it usually people find takes them a bit of time on the finance side to kind of become comfortable with it, and then also a bit of time to think about how they actually want to be measuring the impact, or what do they want to start tracking about this in terms of the environmental and social outcomes. And then I think over time, often what we find is they start off with the assumption that when they go into their carve out, they make it quite small because they assume that it's going to be higher risk and that it might lose the money. I think many of them find, particularly the ones that will go in hoping to have market rate returns, they'll find that they might end up investing more time and effort up front, but the investment itself often stands alongside any other non-impact investment. And sometimes they find it actually does better. And I think many organizations from there have now just started trying to think about how they would then start to kind of elevate that, or at least I think the next step from people with a carve-out space is to think about not just how do I put more money into that particular strategy, but how do I kind of elevate that intention out of that one sleeve or that one envelope of money and start almost, instead of thinking about it, I've allocated some assets and I'd like a little bit of it to be about impact, start trying to ask the question before I get to my asset allocation, if I want to have an impact, what might I start looking for in different types of assets? What might I look for in my fixed income or my bond investment portfolio? Because there will be opportunities once you start looking to find ways to realize sort of a positive intention across the portfolio.
And see, I mean, I talked to a lot of faith-based investors and their organizations, and some have been already active in impact investing. Some were saying, well, they are in sustainable and responsible investing, but for them impact would be against fiduciary duty. Have you seen some drivers that would help jump over that perception or the hurdle?
It's one we struggled with for a long time, and it'd be interesting, how Kayoko has talked through this within her organization, because, to me, it's confusing a choice by the investor with the actual investment you want to make. The choice about what kind of a return you pursue and whether or not that's aligned with fiduciary duty is a choice you make before you start looking for anything. The question then becomes, can you find investments that match your financial profile and also match whatever sort of ethical or social or environmental purpose you're pursuing? The evidence is out there in terms of the portfolios that people hold, in terms of some of the benchmark studies that we've done. You can find some work we did with Cambridge Analytics a few years ago off of our website that was trying to benchmark impact funds in the private equity space. There are opportunities and options out there if you want something that is market rate returns and aligned with a particular set of objectives. Whether or not it would be exactly on the theme that you're most interested in, or whether or not it exactly aligns with the way you would want to approach the theme, that might be a somewhat different question. But kind of the idea that by definition, anytime I am putting in money into an organization that creates a positive real world outcome, I will by definition have to concede or lose money. That doesn't have a natural logic to itself, at least not to my view.
I see. Well, Kayoko, you also mentioned some things that made it possible for you guys to become so impact driven.
Yeah, I think it's worth pointing out that we're very unique for a variety of reasons. First being, as you mentioned, the sisters, at least Catholic women religious, tend to be very progressive. They fall into that category, as you said, of, I think you call them social justice warriors, but they really understand kind of the needs. And to them, this is a little bit of a no-brainer when they hear what it is and what it can do. They, at least my experience with the sisters in our organization is they think this is great, and why aren't we doing this? We should be doing more. They've been pushing me to do more even than I've been proposing. But I would say that we're very fortunate to be in good financial health. Not all organizations can say the same. And so when you have such tight finances, it inevitably forces you to be a little bit more thoughtful in terms of making sure you're getting that exact rate of return that you need in order to support the retirement costs of your sisters or the mission works that you yourself run. So we're in a position where we have the liberty to have a little wiggle room, and we can be more aggressive starting out. We also have really, really bold leadership. I think that's the case for many women religious. Again, speaking from the Catholic perspective, every sister I've met who runs a group is just very bold, fierce, powerful, very much understands why this is necessary. And in particular in our organization, the woman who runs the Missionary Sisters, Sister Barbara, she was inspired by a layperson, a close layperson pro bono consultant that she's known for a while, to learn about impact investing. And she is just, once she heard about it, she's just go, go, go. So I think that that's really tremendous to have that kind of leadership, but also the fact that our governance structure allows our leadership to make those decisions, because I have talked to other faith-based organizations that have a whole slew of committees and layers and bureaucracy and external kind of traditional Wall Street advisors that have a legal or vote in the governance structure that they can weigh in, and we don't have that per se. We really, the sisters, it's their resources. They would say it's God's people's resources, not theirs, but they hold the decision-making power in our organization. So if they want to do it, that's the end of the story. Even if our Wall Street financial advisors say this is stupid and they don't want to, the sisters can override them. So I think those three criteria, the financial health, bold leadership, and the governance structure, have really enabled us to do a lot.
Yeah, that's actually interesting. I mean, it somewhat contradicts what I was saying about the ethics committee. And there's actually a question on who is typically on the ethics committee. Are they clergy and laymen? And I think this is actually the key component. It's not just the ethics committee's existence that allows organizations to be more impact driven, but it's actually a lot about who sits on the ethics committee. If there's diversity within the committee, this helps a lot in terms of age, in terms of gender, in terms of background. So sometimes also laymen are in the committee, mostly with a financial background. But in a lot of cases, it's somebody who believes in the religion to a different degree, though. So they're practicing people, and there are those who are registered as Christians, for instance, but are not necessarily practicing and are actually more Wall Street guys, like Kayoko mentioned. And they are typically the ones who hold the gate and who have seen, okay, well, I've been doing my job for the last 30 years like this, and I don't see why I should change. So this is, these are in a lot of cases, men who are holding back the jump into impact investing, even when there is an ethics committee. Then there was another question, I think, for you, Kayoko, actually somebody asking, well, or Sean, I think maybe you might have a view on this as well, that, you know, as a prospective employee or advisor, I think especially as an intermediary or advisor to a faith-based organization, where do you start? How in depth should they understand the teachings of that particular faith to be effective and aligned, you know? And also where do they actually start educating themselves? Would there be any tips?
Sure. Yeah, I can take a first crack at that, and then I'm sure Sean and GIIN have tons of resources. I would say at least from the Catholic perspective, SEEK, the Catholic Impact Investing Collaborative, CIIC, which I think Erin was going to share a link to, is a really good place to start. I'm on the steering committee of the organization, and it's there's a lot of resources, a lot of stories of different Catholic asset owners who have begun the impact investing journey. So I think that's a good place to start. Understanding Catholic social teachings. I did see that there is a question kind of about, yeah, secular and faith-based is so similar, but should there be some differences? And I don't mean to broadly paint and say they're the same there, because there definitely are. One clear example is in our negative screens, we have very clear things that don't adhere to Catholic social teachings that we screen out of our portfolio. So that's another place from the Catholic perspective to read about Catholic social teachings. The United States Conference of Catholic Bishops, the USCCB, has issued guidelines around investments and Catholic values. That's another good resource to be associated with. But to be clear, you know, our advisors are not Catholic. We're not exclusive in who we work with. So we recognize that the groups that we work with aren't going to have 100% perfect understanding of the faith. But again, it's this recognition, this mutual vision or goal of respecting all human life and trying to serve vulnerable populations, trying to protect the planet. I think those are things that people can, regardless of faith, get on board with. And it's that kind of values alignment that we look for when we're working with third parties.
Yeah, this is also what came out of all the interviews that I did. And you know, Sean mentioned before that exclusion was a very, very big criteria for a long time among faith-based investors, and that faith investing has expressed itself primarily through exclusion, almost as an identity. So there are some differences there. But when it comes to investing for certain values and for impact, actually all of the interviewees that I have spoken to have pointed out there is actually no difference, because these are fundamentally things we all wish, regardless of faith, to happen. There may be, just as a footnote, there are a couple of organizations that do support evangelism, in the sense that they would invest in Christian founders or Christian organizations that support Christian businesses. So that is maybe a very, very, very small side note of an investment where you might see some sort of difference. But to answer the question, you know, except certain exclusion criteria, this is not the case. And I think our time is up, and I want to be respectful of your time. There was a question on the environmental issues, which we will answer through the blog post that we're going to post. So back to you, Erin.
That went really quickly. Yeah, thank you all for your comments, and you kept the chat very active and the Q&A very active. So thank you for your engagement. We're going to do a quick round of key takeaways. So we'll hand it back over to, maybe we can start with Sean. And in the meantime, if the audience wants to write their key takeaways in the chat, please feel free to do so. So Sean, what's your key takeaway?
I think that, you know, it's encouraging and exciting to see the interest that exists within the faith-based community to think about how they can kind of continue to evolve approaches to value-based investing, and that there's a lot of opportunity to draw upon experience and work that's been done outside of the faith-based community around trying to kind of realize sort of positive intentions or positive objectives through investments. And you know, we're certainly looking forward to being able to try to help bridge some of that. We'll also be doing more work over the coming year or two to try to help bring together some of the different networks that have been working together around starting to support the faith-based investor ecosystem as they begin to try to think through these, because it is still a relatively fragmented landscape. I guess I'd say, like, the one thing I'd sort of particularly like to leave with people, for those that I saw a question about how do we get started. For those that either are working on advising faith-based investors or sitting in organizations, I think probably the best place to start is to kind of engage in a conversation around what sort of positive intentions should be reflected in our investor beliefs and our investor policy statements. And then the rest will start to flow from there. But that's the best starting point.
Great. Thank you, Sean. Kayoko, what is your key takeaway?
I will leave you with the words of Sister Barbara Staley, who runs our organization. What she told me is, be bold and have no fear. Just start doing it. I personally am someone who likes to come up with lots of frameworks and tools and models and strategies and plans just to make sure everything's ready to go. But I've really been encouraged by her and other individuals within my organization to just start doing it. You can learn as you go. You can do smaller ticket sizes if, you know, to mitigate your risk as you learn. But if you overthink it and overplan it, you're going to just end up not doing anything. So I would say try to be inspired by that message.
That's a good message for me. Thanks for sharing that. Taeun, what's your key takeaway?
Actually, I leave the two key takeaways to the amazing speakers because they were very inspirational. I actually wanted to plug in, as a boring researcher, my research, because these are interim results and I'd love to do a couple more shadowing. So me sitting in an organization, observing how faith-based investing happens, how the magic happens. So if anybody could think of organizations that be willing to support the research in that way, then I'd be happy to hear from those. And yeah, thank you.
Great. Yeah, if anybody knows anybody, then you can write us after the webinar, and we'd be happy to connect you with Taeun. So thank you for your interest and participation. I realize it's now on time, so we're gonna now wrap the webinar. And thank you, Taeun, Kayoko, and Sean for your contributions to this webinar. It was really interesting. I know I learned a lot. So you know, we will be uploading the recording on our YouTube channel within the next week. We'll do a write-up on our Medium channel. I'll share the links to both of those. And also the link to the CSP webpage in case you want to know more about what we're doing. And finally, our next webinar of this webinar series is on September 30th, and it's titled Family Dynamics in Impact Investing, Mapping Out a Family System, Finding Allies, and Pulling the Right Strings and Avoiding Pitfalls. And that will be with Dr. Falco Petzold and also Viola Werner, Steinhoff Werner at Credit Suisse. And thank you for joining. We hope you have a great rest of your day.
Thank you.
Thank you.